Traders, we're looking at S&P 500, we're looking at 2000 tick chart, and the current structure is looking fairly slow. It's resembling a trading range. You guys can see we have a move up, move down, and price consolidated around this small little area. We eventually broke this important key level, and that means that most breakouts out of trading ranges will fail. So there is no surprise, according to price action rules, that the price is breaking back above the important key level. However, we can see a little bit of a bearish imbalance, because if this is the overall range, price is only hanging around the bottom tier of a trading range, which means that we can eventually create few pushes lower. For that reason, I'm not taking this failed breakout yet. The bearish imbalance came into play. You guys can see market is creating series of lower highs and lower lows, and right now we have a bearish structure in play. This is the trend line that is fitting off the first couple of swings right here. It even fits nicely at the bottom, indicating that this trend line seems legit. So I'll be looking for second entry shorts at this key entry point. We could preferably get a confluence of two key entry points, EMA and the trend line. So the structure is bearish. I wait for high probability setup, two-legged pullback at these two key entry points. All right, traders, I'm resuming the video as I'm going to take a failed second entry long during a failed breakout scenario. Well, price needs to pull back to EMA. Right now, I'm waiting for trigger. You guys can see price hasn't really triggered below the bearish bar just yet. And now we trigger. So I'm dropping my limit order. We got filled. So I'm going to move my stop loss. Actually, I'm going to move it above the entire swing. You guys can see this is not a too big of a stop loss because I'm only going for 6 ticks because the market is really slow. Let's see if we can get the scalp. But I'm looking at the price breaking above the trading range, and most breakouts of trading ranges will fail. New high, first entry long, pullback, second entry long, failure. A lot of traders are going to go long right at the top of the range, and I'm quickly going to move the runner. All right, and we can see that the price is pushing lower. So let's see if we can get a decent runner. But when you see a break, first leg to a new extreme, pullback, second leg to a new extreme, you have to remember that most breakouts of trading ranges will fail. I don't want to fade the first entry because a lot of times we get a little push higher, and you guys can see there was a lower high tempting fade, but you guys can see new high, first entry long, second entry long, people going long after breaking a new high, which means that the uptrend played out at the top of a trading range, which means that you're supposed to be fading the breakout and far away from EMA, and EMA acts as a magnet and price will pull closer to it. The signal bar is not ideal, but given the fact that this is such a great trap, failed second entry long combined with the failed breakout, I decided to pull the trigger on this. And let's see if we can get additional move down. All right, trader, I'm going to trail the stop. I call this unrealistic trailing stop loss. I'm going to be moving the stop loss really tight because I don't want to risk price pulling back and giving back my money, because this is looking like a range right structure. So we could have a steep spike back up. You guys can see this is pretty unpredictable. So I'm going to trail it really tightly, and you guys can see around 10 points is a great runner to start the day with. I'm still leaving my options open, but in case price just bottom falls off of it, I just trail it really tight. It almost seems unrealistic the price will keep going. Come on, 10 points would be great runner during a slow market structure like this. I took a 6 ticks because it is one day before Good Friday holiday, Easter. We know that not that many people are trading, and we took the 10 points, so a decent runner to start the day with. All right, quickly resuming the video as we took our runner up here, and you guys can see we could have managed to put even additional 8 points out of that or something like that. But sometimes that's the risk you take when you're holding a runner. The best way to handle the runner is really trail it above each new swing. So this was the swing, so you would put it above here, and now you would be waiting for another swing and you would put it above there. But given the fact that this made such erratic moves up and down, you never know, you may just reverse from here swiftly and your runner may be gone. 10 points is a reasonable runner to take, in my opinion. All right, traders, I'm resuming the video as we have another failed breakout. But this is just a bottom pick. Like I mentioned, I don't want to take the first entry, even though this is first leg pullback, second leg down. So this is the second attempt to ride it back into a trading range because most breakouts of ranges will fail. I was really expecting to get a high low, but you guys can see how reliable these trading ranges are and these failed breakouts are. It is counterintuitive. You want to see this move down like this and you want to sell, but this is a range structure. You need to zoom out, remind yourself of the structure. And just like here, you got to sell the top, fade the breakout. Here, you got to buy the bottom, fade the breakout. That's the nature of trading ranges, and professional traders, they buy here and they sell at these highs. They don't want to sell at the bottom and they don't want to buy at the very top of the move. Everybody is exiting at these points, taking profits. All right, traders, I'm preparing my limit order as I'm going to take a failed second entry short trap. Wow, look at this quick spike up. I need to wait for price to trigger above this big bullish bar. All right, and my limit order just got filled. You guys can see I'm going for 6 ticks, going to move my runner at the highs. I'm putting my stop loss 1 tick below the signal bar. I'm looking at a repeat pattern of this right here, just to the upside. New low, first entry short, second entry short, failure. Most breakouts trading ranges will fail. And we bounce off my order, and this is not what you want to see here. We'll see. I still like the fact that we trapped everybody going short on the second entry short. This low at these lows near the failed breakout here. They're really struggling. We need a couple more ticks. Come on. And we got filled. Perfect. Perfect price action. You guys can see, this is why you have to throw the common sense out of the window. As a price action trader, you need to switch to the price action trading rules. Everybody piled up on the second entry short right here, below EMA, thinking this is a breakout pullback pattern. Breakout pullback pattern is not for trading ranges. You need to have a trend and congestion there with the direction of a trend where you can take breakout pullback. And this is a complete repeat pattern of this. This one was a little bit, this one was right at the EMA actually. But when I was watching this, I saw this higher low, but higher low is right into EMA. So I don't want to take it. It trapped everybody going short on a second entry short. It reversed, and now this is a trap. So the trap is always stronger than higher low. For that reason, I want to see higher low to be far away from EMA, and the trap can be like this. A repeat pattern, perfect price action, 2 setups you need. Doesn't get better than this. And the trend line was confirming the price. Why am I drawing trend line wider like this? Because now we have a break, 2 legs down, and I'm expecting reversal. I would like to quickly go back and talk about yesterday's trades, because I haven't really seen that many setups while the market was consolidating in the middle of overall range in this mess right here. But once price broke to the upside and there was a proven uptrend, my first trade for yesterday was a new high, first entry long pullback, second entry long, and I had a little bit different signal bar, but I ended on engulfing. Price ticked lower, reversed up, and as it was reversing up, that's where I took my second entry long, and it ended up being a failure. I was expecting for price to create after break new extreme, but the bigger key entry point, the bigger key level, the high of the day came into play, and price needed a little bit stronger correction. But notice what happened. There was a break, new low form, and now that the sellers are over, we expect to see how EMA is going to act, and price pushed above EMA, confirming the bullish momentum, and we still need to get new high of this previous uptrend. So there was a high low, but high low closed below EMA, and price kept pushing above EMA, and there's a failed second entry short, but didn't set up perfectly as well. But this is a repeat pattern of what we had right here, because price is right now pushing higher. We have a downtrend working lower just like we had here, break, new low form, and at this point on, sellers are over and the bias is very bullish. Notice how we've been working higher the entire day. So after there's a break and a new low, you expect push above EMA, and now we have a repeat pattern. We have a high low right here, and we have a failed second entry short right here. So these two patterns are repeat patterns of each other. The context is perfect, and I didn't take this trade right here because I had a little bit a different signal bar, but I ended up taking this failed second entry short, new low, first entry short, pullback, second entry short, bullish bar. Then there was a new high, first entry long, second entry long, but the signal bar is a bearish doji like this, and by the time you get this bar right here, not ideal because your stop loss has to go below here, but with the better signal bar, this is a decent entry. And it was it for yesterday. All right, traders, so I'm gonna wrap it up. 2 quick trades. You guys can see runner got stopped out. So no runner this time. We could have actually had a gigantic run here, but you don't know. There's no way you can foresee the future. You just follow the trading range rules. You guys can see price strongly reversed down. So right now we are probably expecting some stronger downtrend to develop, and we are looking for a couple of short entries. But I literally, I was done. Market opened 15:30 right here, and I took this trade. It's only something after 30 minutes, and being done this early is absolutely amazing. Yesterday was a grueling day. I apologize for not doing the video because it was just too slow. I reloaded my data 10-20 times, and I just kept getting weird signal bars, and I didn't really do much talking. So I just, the video would have no content. I was just staring at the screen and not really commentating anything. But today we have perfect example. You guys can see current time, CST, is 907. So you could have been done within 30 minutes just following the range rules. I'm gonna wrap it up. I'm gonna see you guys in the next one. Take care, everybody.